Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and just continue to look at the move that it's currently in. So if you guys like the content, please go ahead and subscribe to the channel. Go ahead and give the video a thumbs up so that it can get more visibility. And also check out the Telegram channel, which you can find a link to in the description below. So one of the things we've talked about a lot on the channel, and I'm sure we've talked about it so much that some people are sick of hearing it. But regardless, it's important to reiterate that the 20-week moving average is our support line in the bull market, historically speaking. You can see that once we get above the 20-week and hold it as support, then we're starting to really move up. It might at some point end up leading into this parabolic phase. During the last market cycle, it was the transition of holding the 100 week to the 200 or to the 20 week. So the transition of holding the 100 week moving average and then moving over to the 20 week moving average. We continued to go up. Once we broke the 20 week, the party was over. And then we held the 20 week as resistance for the duration of the bear market. When we get above the 20, we go up. When we get below the 20, we instantly have a candle down. Again, we get above the 20, we go up. We get below the 20, we have a big red candle down. So this, historically speaking, has held a lot of weight. We've been talking about the 20-week moving average for a long time, obviously well before these candles printed. And the idea is when they do print, you want to consolidate. You want to, this is not financial advice, but what I do is I consolidate, I move my positions in some other coins, primarily either into Bitcoin or stable coins during that time. Because most of the time when we're below the 20-week, other coins tend to perform a lot more poorly than Bitcoin. So anyways, we're above the 20-week now, and a lot of people have been saying, okay, the halving's coming, we have to dump at the halving. And the reason they say that is because, well, of the last halving. We started dumping going into the halving, and then we ultimately came down to the 20-week moving average. So during the last halving, we had already been holding that 20-week moving average for a pretty substantial amount of time. If we were to take a move here, say from this point on over, we were at support for over 100 days. I mean, we're talking almost 4 months. And then we broke above the 20-week at the halving. So by the time we crossed the Bitcoin halving, we had been either at the 20-week moving average or above it for 4 or 5 months. Okay, so in the current cycle, that's not the case. We've only just gotten above it. You can see here, if we look at where we got above it, we've only been above it for about 14 days or so. And obviously we're looking at weekly candles, not daily candles, so it'll be in increments of 7. So a lot of people were saying, okay, well, we're going into the halving, we have to see a dump. And as we said in a prior video, we may see a dump. It doesn't, we may not. If we saw something commiserate with what we had last time, then maybe we would see a 26% dump. But ultimately, you can see that we went back to the 20-week moving average, and this is where we held our support line. In the current move, we went down to the 20-week moving average, but we haven't actually seen candles back at this region. But if you look at the price, if you just look, you can see that we came just north of the 20-week moving average. I saw the price get down to around $8,100 on the exchange. Some of the exchanges I was looking at, and the 20-week moving average is around 8,000. So you can see currently it's at 8,068. So I think this is ultimately where some bulls came back into the market, because there are people speculating that maybe the bull market is starting. It's obviously too early to tell. I get this question all the time. People say, well, we're above the 20-week. Does this mean the bull market has started? No, it does not. And in fact, here, we were above the 20-week moving average for, the better part of, say, like half a year or so. But the minute we tested the 20-week, we couldn't hold it. And again, here, we couldn't hold it. So ultimately, we're going to have to hold the line. I published a video the other day called Hold the Line, and we held it. So, it's optimistic in the short term, but in terms of, say, verifying that we're really starting to change the tide from a bear market to a bull market, we need to see this this transition take place. These momentum shifts don't happen overnight. It takes weeks. It takes months of testing these critical levels to then bring affirmation back to the bulls, and to also potentially make the bears FOMO back in that are waiting for that $1,800 Bitcoin. And I have a feeling the people that are waiting for that $1,800 Bitcoin as I've been saying all along, are going to be waiting, for the rest of their lives, basically, because I don't ever see it happening. Now, clearly it could happen. I'm not going to sit here and say that I definitively know what is going to happen, but if you think about it, whatever happens with the price of Bitcoin is irrelevant. What's relevant is how you react to it. If you're holding, say, 10 Bitcoin right now, and you watch the price go to 100,000, and then you watch it drop back down to 40,000, then that's on you, and you need to come up with a plan so that you don't fall into that scenario. And I do offer a premium list, and you can find it here at intothecryptoverse.com. You can look at it. You'll get a weekly newsletter, and it's not just a soft newsletter that just talks about my feelings for the week, which I've seen that happen a lot of times with some newsletters. We're just looking at data. Okay, I'm presenting the data. I'm the data messenger. I'm analyzing it. I'll give you the risk metrics for a few different coins. We'll update those. We'll talk about dynamically dollar cost averaging. And in each report, we have kind of like a special topic of that week. So for instance, last week was the best, statistically speaking, what is the best day to buy Ethereum? The week before that, it was what's the best day to buy Bitcoin? And that doesn't mean that specific day will always be the best day. But if you carry it out over a long enough period of time, then historically speaking, there does seem to be some definitive days that are much better than others. And there's some days that are just terrible, historically speaking, to be buying coins on. And this is completely throwing out any moving average, any other type of analysis. It's just looking, okay, based on this day of the week, historically speaking, are we getting in for a better price on average or a worse price? So this is catered to people that are smart enough to realize that most people are going to lose their money day trading or leverage trading, and they're basically just wanting to slowly enter the market. This just provides you a little bit more information. So if you want to join it, just go to intothecryptoverse.com. If you want a discount, you can pay with crypto, and you have to pay for 6 or 12 months. And I want to say that if you are wanting to join, the private Telegram group is going to be capped at 250. I've said it in a few videos recently, so if you're wanting to be part of that group on this market cycle journey where I put out these reports and whatnot, they'll go straight into the Telegram group. Then go ahead and join, because it is filling up. It's filling up fast. I imagine I'll have to close it down in a few days. It's going to be capped at 250 people. Right now we have a little bit over 200, but just know that it's going to close down in a few days. You can still sign up for the newsletter at any point, which also comes with premium videos, so that's always available. But if you want access to the private group, then you need to sign up sooner rather than later, because it will be closing down and that perk will be disappearing. So go check that out if you're interested in joining. So looking back at the chart, as we said, most people were saying we're going to see a dump going into the halving. Here we said, maybe it'll happen, maybe it won't. Doesn't necessarily have to happen. What does, what's important is how you react. And one of the things we talk about on the channel is the risk metric. And for those who are following, say, the conservative risk tolerance, these people, there's a handful of people in the group that follow this tolerance. They were able to sell at that risk tolerance that they were okay with, and then you can, buy back in when the risk drops, back to the level that you're okay buying. So it's just a systematic approach. It has nothing to do with your emotions. You look at the risk level. Once it gets to your risk band, you set your stop loss for that portion of Bitcoin, not the whole thing, but that portion of Bitcoin that you're selling, and it gets triggered if it drops back to that, and then you can reinvest it. It's just one way to slowly accumulate Bitcoin. But again, there's a lot of people that are not selling right now, and I'm one of them. I keep buying up to a higher risk level. So anyways, we're looking here. I want to focus on the 50 week as well, because we talked about the 100 week. We're high enough above the 100 week that it's not super relevant at the moment. But I do want to talk about the 50 week moving average. And if you go back and look at the 50 week moving average, we have talked about it on the channel a few times. We don't talk about it as much, but it does tend to play, somewhat of a noticeable role sometimes. You can see back over here, I think I just removed all the indicators. So if we scroll back over, you can see in the accumulation phase of 2015, it was that 50-week moving average that was our resistance point. And once we got above it and got to the 20 week, we never even saw the 50 week again until the crash. You can see we held support right at the 50 week moving average before going where? Straight back up to the 20 week. I mean, it's amazing how important the 20 week is. So we went straight back to the 20 week, and then it was basically saying, haha, just kidding, we're going down. And that was pretty much already pretty apparent once we saw this break here. Again, over here, what happened after the peak? Oh, we dropped down to the 50 week. Pretty similar thing. And again, if you come back and look at present day, the 50 week, we saw we held support, but then here we held support again, and then here we dropped down. We dropped below the 20 week, and it also happened to correspond to the 50 week. We dropped straight down to the 200 week moving average. So currently, we published a video a few days ago talking about the 50 week and how this candle of May 4th was kind of our resistance point at the 50 week. And to look out for this candle, because if you see us start to come back down, then it means we're going to test the 20 week, and maybe we're going to go back to the 100 and then back to the 200. But in the short term, we've actually continued moving up. And to me, this is just one of these short-term, like really small corrections. I mean, looking at a 15% correction, on a single wick is not much of a crash as many people were expecting. This is essentially par for the course. And I can tell you right now, if you're not resolute on your thinking and have a plan in place, and you get freaked out by 15% moves to the downside, I mean, you're going to absolutely get destroyed in the next bull market. Because as we have mentioned many times, nothing just goes monotonically up in price. You're going to see these moves up and then 30% crashes, a move up and then a 30% crash. This is going to happen probably 10 times during the next bull market. So get used to that. If you're not used to it, there's a lot of people that follow me. This is their first market cycle. Some of them, I think, have bought into the market at the peak in 2017. So you're still, you always have been, or you've basically been molded into just always being pessimistic, because anytime the price goes up, you say, okay, well, it's coming back down. And we've been saying all along during this rally that, one of the things that is necessary for a bull market to start is that, that feeling that so many people know that the price has to come back down, but it never does. It's that, like that, people saying, the bears saying, okay, well, we're going back down. This is a fool's rally. Watch, we're going to come right back down, and you'll see that I'm right. And you see something like this. You see a weekly candle. It's a red candle. We had a wick down. The bears are coming out, putting out their tweets saying, I told you so. They're posting their shorts that they had. Probably also had longs set up too. But they're posting the shorts that they had, to show that they're taking profits. And then you see another move up. And this happens quite frequently in a bull market, because you're going to have these fake outs. And you'll see recoveries. I mean, we went to 10,000, we came back down, and now we're back closing in on 10,000, currently at around 9,600. So this will be par for the course in a bull market. And as we've said, a bull market has to start at some point. I mean, assuming that a bull market will exist again in Bitcoin, which is an assumption, it has to start somewhere. And, one of the ways we'll see if it's starting now is if we're going to hold the 20-week moving average. So keep an eye out for that. It's probably by the time we test it again, it'll at least be $8,100, notwithstanding a sudden drop today. But watch out for that. Look out for just a continued rally. If you see us breaking above 10,000 and moving to, say, 10.5, things could start moving quickly. And this is why, buying when the price is low, it's not rocket science. It really is not. Buying when, and I did do an internship at NASA when I was an undergrad. Buying when the risk is low, when the price is low, and we're near the 200 week, cannot be overstated enough. It just can't, because you're getting so much more Bitcoin down here than you are even at the current prices, which is why I do the dynamic dollar cost average, where you invest a lot more down here, and then when you're up here, you're a little bit more conservative with your investments, just because you recognize the potential to move down in the short term, especially, is a lot higher than the potential to move down here, because the 200-week moving average, historically speaking, is a really good baseline level of support. So for me, what I'm looking for, I'll obviously be watching the rally. 10,000 is definitely a number we have to be looking out for. I know there's a lot of people drawing, this trend line. I'm not a huge fan of drawing lines on the chart. There's obviously a lot of people drawing that line right there, and then drawing the one up that comes this way to show the support. But remember, the trend is your friend until it's not. At some point, we might break through this, and it'd be kind of poetic if it were to happen, going right after the halving. But we'll see what happens. Again, stay level-headed. Even if the price goes up, it's important, it's necessary that you stay resolute on your decisions, and that you're not just FOMOing into the market, that you're not just saying immediately that Bitcoin has to go to 20K, because it's almost assuredly not going to 20K anytime soon. So stay focused, stay diligent, come up with a plan, whether it's through my premium stuff or not. Come up with a plan, stick to it, and we'll be on the journey together. So thank you guys for tuning in. I know I've rambled a bit. Please subscribe to the channel, check out Telegram, and I'll see you guys next time. Bye.